afternoon. Sorry, I just took a sip of my coffee. It's not coffee. It's a chai latte. And you know when you put powder in for a drink and sometimes there's a clump of powder which floats to the top and doesn't mix? I just got a whole mouthful of that. Sorry about that. Oh dear. Anyway, morning. How are we doing? Afternoon even. Monkey, Gregors, it's time. Evil, Daniel, Fletch, how are we doing? Virginia. So, Japanese yen pushed further, more. It's not stopping. So I've decided, I got out of some this morning and I have stop losses above ADR today. So I have decided to call it a day above ADR today, or tomorrow if the intervention doesn't happen, obviously, or if they decide to push up. So if we go above that level, I've had it. I'm out. I'm done. I'm going to take about a 10.5% loss on this, which is equivalent to the oil trade I had last year. Very rare I get a trade that goes this hideous. I had oil last year, which did the same. But I was saying in the Discord group this morning, although this is going to be a heavy loss and possibly the biggest one I've had, because I've held it and because of the swaps, basically, the last two intervention moves that I got on board with more than outweigh 10%. So it's kind of horses for courses over the period of the last 3 years. I've only taken 3 intervention trades in my life. 2 of them turned into massive profits. This one, not yet. But it's not over yet. That's where we'll be if it happens. If it happens. So I put last position on yesterday. Got out of one this morning. I got out of one yesterday as well. And the stop losses here will remove all positions below the line. So it will remove that one, that one, that one, and that one, and leave me these 3. Reason I'm not going to stop out on those 3 is if we are still here tomorrow, and I suspect we will be, when the Japanese interest rate comes out, this could collapse. It could also spike and then collapse, or it could rally. So those are the 3 outcomes, obviously, which are going to happen tomorrow morning. If it spikes, I'm not going to take the chance. I will stop out. If it obviously spikes and then drops, tough crap. If it runs down, fantastic. But either way, I think there's a probably high probability I'll get stopped out on them, because even if it doesn't, if price action goes like this until tomorrow morning, the spread will go huge tomorrow. It's the second ever interest rate in 2 decades from Japan. The market's going to be spread to crap. Whatever happens tomorrow, I guess we're going to get stopped out. Well, I will. But so yeah, what I'd love is if we got an ADR hit to the downside today before that, because they've got to spread it over an ADR to get me then. Brokers, highly likely, isn't it? Anyway, so yeah, so that's stuck. So yeah, see what happens with that one. Afternoon champagne, FTNet, Jazzbox, easy. When it says tentative on Forex Factory, does it mean it can be any time overnight? Yeah. So this afternoon in 7 minutes, we've got GDP for the US dollar and unemployment claims. So we'll see what happens with the US dollar this afternoon. Obviously, I could get stopped out on this afternoon. If this US dollar news all comes out as positive and they rally to ADR today, I'm out anyway. But if this all drops today, if we get negative figures for US here, obviously it's going to put me in good stead for tomorrow morning. So it's one of the other things that's going to happen, isn't it? It's a binary. The market is binary. All markets are binary. It can only go up or down. One of those 2 things is going to happen. One of them is going to make me money. One of them is going to lose. So yeah, sensitive. Tomorrow we've got the CPI number coming out at 12:30. And then at some point tomorrow, they will release the interest rate and the monetary policy statement and the outlook report, which is pretty much the same thing. And then they will hold the press conference, which is usually around half an hour after the interest rate statement. So, yeah, it varies, but it tends to be usually somewhere around 3 or 4 o'clock in the morning. If you go back and look at previous rates, so let's go and look at it now. March the 19th. So if we go back, gotta be careful, don't drag stop losses here. Where are we? March 19th. So that there is 5 o'clock, which is 3 a.m. So that was the last one we took off. So that was 3 a.m. Yeah, so it's typically around about 3 or 4 o'clock, roughly. So, but yeah, we'll see. But this afternoon, obviously, we've got the US first to come out in the next 5 minutes. So tomorrow, obviously, is a huge day. You know, there's even if I stop out on this tomorrow and then it collapses, fine. You know, it's just I'd like to see them do one or the other and stop bloody talking about it. Basically, that's all we want. How's the sentiment EA doing? Terrible. Well, not terrible, actually. Sorry. Potential fraud. Ooh. From Basildon. Nah. It's usually some Forex scammer when it comes up potential fraud, but you never know. Yeah, the sentiment EA I've got running on two accounts at the moment. It's banked. I don't know. It's banked quite well, but I couldn't get it working well enough, basically. So it's doing all right. It's banked to just over 2K. Swiss yen ADR, we know about that. This is one of the old accounts, so ignore all that stuff on there. But the problem is, when the sentiment changes, what do you do? So the problem I had with the sentiment EA was, and this is one of the reasons I wanted to live test it. It's a shame I've shut it down on the VPS now, but it painted the numbers long and short above the candlesticks. And the trouble is, you'll get into a short trade, for example, and then you'll get into another short trade because the sentiment's in the right direction. Then it'll take another one the next day because it's in the right direction. And then the sentiment will change and it will drop. So what do you do then? Because the sentiment is now saying, actually, we shouldn't be doing that. We should be doing the opposite. As you can see, if you closed them all out, you take huge losses. So it doesn't actually work, which is interesting. So from an intraday perspective, you can use it as a directional bias. But my findings are it's got the same odds as a moving average, 50-50. Yeah, you can be above a moving average with no problem whatsoever. But it doesn't mean price is going to go up. So same as sentiment. If sentiment is pointing that way, it will do that a lot of the time, but it will also do that. So, yeah, I couldn't find an edge in it. It's twice I've tested it now, and I've tested it in 2 different ways, and I still couldn't find an edge in it. So I decided to scrap it. I'm just going to close out those trades, basically, and manage them as positions. We're US dollar, aren't we? So let's watch Euro US. We have got 3 minutes until the news. Afternoon, Brian. Afternoon, Johannes. I've just answered your question. Think I'm going to stay up all night and watch? That's keen. I won't. I'll be asleep. And I'm assuming my broker will honour my stops. We will see. I'm pretty sure my broker will honour my stops, even if the price doesn't get to my stops. But that's what brokers do. Afternoon, Baggy, Amy, Mumo. Did you test the sentiment EA to where you enter anti-direction and close at the end of the day, regardless of the result? No, but you'll have days where it will go way into drawdown. It's basically exactly the same as flipping a coin. Exactly the same as flipping a coin. I was trading both directions. So I had two accounts running, one account running going with sentiment, one account running against sentiment. Yeah, they both banked between $1,500 and $2,500, somewhere around about those regions. And they were both sitting in about 3 to 5K of drawdown. So it doesn't matter which you use, they both banked regularly and went into drawdown regularly. So you would have taken losses. Sentiment doesn't make it. You'll have a sentiment reading saying that you should be longing it, and a news event will come out and it will drop 2 ADR. Yeah, you'll take a loss of 2 ADR, whereas the sentiment long will close out with a quarter of an ADR of profit. Just doesn't work. The problem with it is there's no downside risk limitation. So you'd have to limit your risk with a stop loss. And I tried that. I tried a stop loss strategy. I tried multiple stop loss strategies using sentiment as a directional bias. None of them came out profitable. Long term, it will work, but I'm looking for an intraday way to use it. I've got long-term strategies. I don't need any more. I'm looking for intraday basically, which is why I was looking at it. So, afternoon, George. Afternoon, Brian. Magic Cable, yeah. Right, Euro and US dollar, we got 30. Well, sorry, US dollar, we got 30 seconds. So, unemployment claims and GDP. Get the news up. Where has Discord gone? There. Spread widening. So we want to see this fly up. Negative US I'm looking for. Ooh, big spread. Really? Woohoo, bye-bye. There goes the US dollar. Okay, so it's negative US, massive negative US. So we'll see. Oh, blimey. Look at that whipsaw. Unemployment claims 207. So marginal positive. GDP down. Wow. 1.6 on a forecast of 2.5 on the quarter. That's a massive drop. Nearly a 1% miss on GDP. That's really negative US. Mind you, GDP is not necessarily a leading indicator at the moment, is it? It's all about interest rates rather than GDP. We're not changing interest rates because of GDP anymore. We're changing it because of inflation. So GDP's got more of a back seat than normal at the moment. Market really doesn't know what to make of this. We could have a big move off the back of this. Look at these spreads. There's a hell of a lot of volume coming in at the minute. So yeah, 1.6. If you look at previous figures, we've had these types of results before. So typically we're kind of within a 0.5% most of the time. So, you know, that's a 0.6, that's a 0.4, that's a 0.9. We had a 1.3 there, which was big. So it's a 0.9. So it's quite a big miss, but you know, it's compared to other results, it's much higher end than we normally get. Yeah. So that's a big negative for the US, but mixed with unemployment coming down. So maybe they're assuming that the unemployment rate is going to drop. But again, that's not really impactive on inflation at the moment. Sorry, interest rates at the moment either. So we'll see. This might just whipsaw coming down. Look, that's going to be driving US dollar yen up. I got all excited then. That looked like it was going to be a big one. Did they catch the horses? They did. One of those poor horses. You see all the blood down the front of it. Awful. Apparently some bloke, well, some bloke, it probably wasn't just one man. I'd imagine there was a machine controlling it, but there was a building site and they were down an alleyway or down a side street in London, and they dropped a huge bag of concrete from the top of a building. So luckily there was no one underneath it, but I guess it was probably inside the construction site rather than on the pavement. But it made a hell of a noise, and these two horses just went for it. And they started crashing into cars and buses and all sorts of stuff. So if you don't watch the news about England, that's what happened yesterday to us. Terrible. Right, so not a lot of movement off the back of that. At the moment. So market really not sure what to do with that news. But obviously anybody that's trying to trade the news is liquidated. Somebody sent me a set file for news trading. So bear with me 1 second. Sorry, I've just got to get a parcel. 1 sec. So, wife's gone out to walk the dog. And then all of a sudden, deliveries arrive. This is the third one I've had today. I'm working here. Sorry about that. I'm back. So I can't remember what I was talking about. Yeah, horses. Yeah, crazy. But anyway, I think the horses are okay. I haven't heard any more information, but horses galloping through London. Afternoon, Rod Sweeter. DCM, I got that phone call exactly the same time as you. London number. Didn't affect the pound, though. What, that news? Or the horses? So pound US dollar will obviously have moved, but a little bit of a whipsaw on the pound. It doesn't look like the market's really that interested in that. What the hell is going on? Wow, sent the indicator into a frenzy. That's because we're going sideways basically all day. We haven't had a break all day. Yeah, so not a lot of new movement off that news. So it is, the market's had a slight bullish reaction to it by the looks of things, which is obviously not what you would expect off of that. But in all reality, we haven't actually gone anywhere off of it. So it's just a whipsaw reset back to normal. So I would be very surprised if the market was going to be putting any big moves in today anyway, because obviously tomorrow is the interest rates for Japan, which is obviously going to be a big mover tomorrow potentially. So not really any reaction to that. You can see we've had 2 ADR hits today. So the Swiss yen hit ADR and has come off that beautifully. So lovely reaction at ADR high there, straight up into ADR and straight back down into a 50% retracement. So nice reversal alert on the 5 minute there up the top, nice and tight, easy, nice trade today, that one. And pound yen, same sort of reaction there. I'm in short on that. So I've taken a this morning, Pound yen short. So pound yen ADR, we'll have a look at the ADR, sorry, RSIs in a minute, but it's an RSI extension above 80. So the EA is automatically scaling me into the 80 extensions because they are very high probability. And euro yen, I think, is the other one. Yeah. So euro yen also hit 80 this morning. Nice M pattern there. Your reversal alert on the hourly is just about to kick in, but I got the entry there, which would have been this morning around about an M5 reversal alert. So the reversal alert was there on that candle. My entry was there because obviously I'm just using the MA on the position trader EA rather than the reversal alert. But it did invalidate the high. So your second reversal alert, if you didn't take the first, would have been much tighter, nicer. But yeah, so those have both hit. Sorry, the Swiss yen has hit ADR and the pound yen has also hit ADR today. Both played out very nicely. RSI wise, I'm just going to quickly look at all these other yens. Some really nice yen strength just starting to come through off the back of that news. Look, very strong US dollar move. If you look at the yen, we've got very strong buy coming in on the yen at the moment. Everything coming down hard against the yen. But US dollar yen pumping. So you can see how strong that US dollar reaction is to that news. Negative. News never makes any sense, does it? So negative news on the US dollar. US dollar pumps harder than the Japanese yen. But that is good because it means that we've got yen strength coming through. So if this US dollar rally that they're pumping at the moment off the back of this news fails and it just starts to weaken, that Japanese yen move will probably take over and push that back down again. So that's good. So we'll see if this continues, this US dollar move. So we've got those two ADRs. We've also got some RSIs to look at today as well. Notice that price reverts to the same level 15 minutes after the news comes out. Sometimes it doesn't. Everything happens sometimes. Every system you could ever show me ever will work sometimes. And sometimes propulsion gaps get tested and it bounces out of them. Sometimes propulsion gaps get filled. Sometimes it bounces off resistance. Sometimes it accumulates and breaks through it. Sometimes it flies through it. Price does stuff sometimes, all the time. That's what system or strategy or an edge is. The fact that sometimes, more often than not, when you get above the 80 level on the RSI, you get a pullback profit take move occur. Sometimes it will flag and break or accumulate and break. Everything happens sometimes. It's about finding an edge. How can you use that edge? If the EA opens positions using RSI and reversal alert regardless the news, why do you follow the news? Because you need to know when the market is going to move and ideally what direction it's going to go into in the future. So if the euro interest rate drops or Lagarde comes out and says the interest rate is definitely going to drop in June, I don't want to buy the euro from now until June. Yeah. So I will turn it off longs. It will go short only. Yeah. If you're not aware of fundamentals, fundamentals drive the market. The reason this has just happened, is because of the news. Yeah. It always makes me laugh. People in the Telegram group regularly, new traders go, what's just happened to US dollar yen? If you don't know, you shouldn't be trading. The news is what moves the market. It's the only thing that moves the market. The reason things go into trends is because the fundamentals demand it. Yeah. If the US dollar is putting their interest rates up and the euro is dropping their interest rates, the euro US dollar is going nowhere but north for the foreseeable future until that situation changes. If you don't know about the news, you don't know what to do. At the moment, for the last 12 months, we've had no news. So what we've seen for the last 12 months is, well, not kind of is for the last 12 months since interest rates dropped, but what we've seen for the last 3 or 4 months specifically is that because there has been no forecast. There now is a forecast on that. You want to be doing that because it's bullish, US dollar. So you got to be aware of the news. If you're trading intraday, you want to be in around the news to make money. If you're trading anything above hourly, 4 hourly, doesn't really matter, but you need to be aware of the fundamental direction. But if you go and look at the buyer scorecard, it'll explain it all on the website. Explains basically how the fundamentals affect the market. Afternoon, Chucks. Afternoon, outro. Not trading SIH today. No. Markets doesn't open for 45 minutes, but good trades yesterday. Did trade yesterday. It was very good. Afternoon, David, Steve. Right, so RSIs. Going back to fundamentals, tra-la-la, good name. If you just want to use a 200 moving average, for example, that one there, on whatever time frame, that's a 40, but if you want to use a 200 moving average, that will tell you what the fundamentals are. But you will miss the start of a move if you pay attention to moving averages, because the moving averages tell you what happened X candles ago, which is why they're useless for the vast majority of traders, because I've got a lot of moving averages on the chart here. Every single one of these lines is telling me what happened X candles ago. So this black line is telling me right there what's happened 200 candles ago. What's the average price over the last 200 candles? How's that help? I know it's been going up. I can see that. All this does is tell me what I can see started down there. But fundamentals, you can't actually see that on the chart, but fundamentals there switched. Yeah. So the euro US dollar interest rate outlook changed there. The moving average told me about it there 2 months after it happened. That's why you need to pay attention to fundamentals, because if you're the wrong side of something for 2 months because the fundamentals have changed bias, you're stuffed. By the time you get to the 200 moving average and it's telling you actually you should be going long now, you've missed the move, and there's a good chance 2 months later they change their idea on the interest rates and they decide, actually, no, we're going to change the bias the other way. So you get in long just as the fundamentals shift short. Important to know. It's just a filter for direction. That's literally all it is. Aussie dollar yen. So RSIs today. Obviously, we've had another bullish run on the yen. Hourly RSI extension just tapped ADR, that just about. So we're back up above the 75 level Aussie yen. So forget that there, because that was a V-shaped recovery on the safe haven run. So if you just draw a line across that, because that move was just because of the Middle East problems. So that really is your leg up. So you're looking for a pullback on that leg to some extent. So bear with me 1 sec. So obviously we don't know what's going to happen with the yen, but market seems to be buying the crap out of it this afternoon. So it could well be that they're buying in anticipation of increase tomorrow. But we'll wait and see what happens this afternoon. We could well have a big, strong push in as people are getting into the yen, expecting that. And obviously, if that happens, maybe they're expecting an intervention move if it goes against them tomorrow. So we'll see what happens. Don't forget, the market's got the power to drive this. The US, if they want to, could push this yen move further tomorrow, which may force their hand. Who knows what's going on with it at the moment. But opportunity for short was this morning, literally an hour ago. The others we've got are Euro Yen. That one I've just got into. That was an 80 extension. It's now just extended to the 70 level. We've got also the Pound Yen and the New Zealand Dollar Yen with the other RSI extensions for yen pairs. I didn't realize I got into New Zealand as well. Okay, I'm in New Zealand as well. That's too much. I don't want to be in all of these. I'm just gonna put a little. It's only a little $70 stop loss. Just putting a tiny stop on that one. I don't want to get too exposed on it. But equally, if this move happens tomorrow, I want to milk it. So good moves on the yen pairs. Pound US dollar also extended today. That's already played out as well. That US dollar's pushing quite hard. So there was your RSI extension. Maybe looking for a pullback into there and just pop away, but they may well want to undo that entire move there. So from this initial move, we've had just an accumulation pullback. Yeah, so this propulsion gap, which they bought out of here, is most likely where we push to, which is 125 ADR to the downside. They have just taken out that high as well. So we'll see if that holds. Bit of an odd reaction that to the US news, but we'll see. So those are the yens. We've had the US. Pound Swiss is also extended today. So we just got back up there again. Nice diverge. No, it's not divergence. Ignore that. So, yeah. It is pushing up on relative strength. So we have broken out again, but lovely long move. No profit take on that for 3.5 days now. So looking for some kind of pullback on it. Got some multiple highs here that could act as support on the way back down. You got this little accumulation, tiny little area really, but there's not really anything to you come back down to that propulsion gap there. So this is what started that move off, and it hasn't looked back since. So you're looking for a big push down there. Again, Swiss franc, we've had no more news on the Middle East. So we'll see. Pound Swiss, Euro Yen, Aussie Swiss. That's just started to roll over as well. We've got a Swiss franc run coming in as well. Bit of money coming into the Swissy today. Only a little bit, not a lot. I was just checking the news just to see if there's anything about the Middle East this morning, but there's not. So a little bit of movement on the Pound Swiss down. So you've kind of missed the entry on that. No, it's just about actually. Yeah, it's nice reversal there. 3 legs. So that looks good for an entry. And what was the other one I was just looking at there? Aussie Swiss, wasn't it? So Aussie Swiss also extended to the downside. Upside, sorry. So nice divergence on that. So nice bearish divergence in play. So you got a reversal up, which is just about to go in there. So look for a pullback and drop. And again, same thing. Ignore that. So these lows here, we had the Swiss safe haven run, which undid, and they returned it back to the origin of the move and then pushed from there. So that is really the leg that you'll be looking to pull back on. So that propulsion gap is just over a 50% retracement, which would make sense on that leg if it's going to continue to push up. But again, Swiss franc we know is going to be affected by any kind of news to do with the Middle East. So those are your hourly RSI extensions. 4 hour, you've got very much the same. Aussie Swiss extended on the 4 hour just above the 70 level. Not quite extended enough. I much prefer above the 80 and below the 20 on the RSI on the 4 hour. much better opportunities to get in. Not far away though, and you've got a lovely resistance coming up out of that propulsion. So they're basically reselling that propulsion move. So we had that propulsion push down, added. Yeah, this is the first retest of that level they added their second batch of orders into. So if this is going to be your peak formation, high, low, lower, high, and continue down, this is where you want to add in to get onto that second leg. But obviously they may come up and just double top this and form a range here. And obviously they could just break out. So we'll see what happens to that one, but that's nicely extended to the upside. Aussie dollar CAD is also extended to the upside. These are only just those sort of 70, just about getting extended. Beautiful reaction at the weekly high. That's your high of last week. We pushed down, pushed back up, immediately limit orders triggered and driven that back away from there. But this will also be Canadian dollar strength coming off the back of the US dollar. So that's probably just to do with the Canadian dollar and US dollar strength. Actually, the Canadian dollar doesn't look like it is powering up. Might be. Yeah, no, there is a bit of strength coming in the CAD. That's a hell of a move on the US going in. Look. Got an aggressive drawdown control position on this. I forgot to put my stop in place. Let me just move that up there. So roughly half an ADR stop on that one. So that's an aggressive position. So yeah, big move coming in this US. So testing high of the day here. So that's daily high. See if they push through that. We might get popped through this. So this is either going to double top here, or more likely that. But we'll see. See if they get through. Japanese are not going to do anything today. I would be very surprised if they did something today. But if tomorrow's interest rate, we'll come back to that in a minute and see if it gets through. Aussie dollar yen, we've looked at. Whoops. Big extension. So that was just coming off the just shy of the 80 level there. So nice reaction there. CAD yen, same thing. Big extension. Looking for a pullback. Again, probably from that sort of level there. These highs, very nice. So that 2-week high, basically, potential reaction point. You have the 24 coming up underneath that. Euro Swiss is just about extended to the upside, only just. But again, all these ripe for a pullback. Really, really strong moves we've got going in at the moment. We're just running into that propulsion move, which is that accumulation break. So that's hit that previous resistance. Sorry, support and resistance. Just had a reverse alert on that. Very messy though. Also, you've got Euro Yen we know about, massively extended. First entry gone in on that. And only entry. If this pushes, I'm not staying in that one as well. Pound Swiss. Again, big extension. Look at this, green candles all the way. Absolutely no pullback on this whatsoever. Straight through that weekly high from last week, look. And we're just painting an inside bar now. So we've got 4-hour inside bar going on, which means that the market has run into exhaustion. So if we remain as an inside bar, any break to the downside may well start a profit take move on that leg, which will pull you back down into that propulsion move there, potentially. Pound yen also extended to the upside, we know. So again, all these yens are all about tomorrow. New Zealand yen, the same thing. So market having a very nice reaction, especially on the Aussies. Aussie and New Zealand yen selling off quite nicely. You got 4-hour bearish engulfing going in there. Not really any particularly strong level. I mean, it's the top of this propulsion gap, basically. Aussie yen's out all-time highs. So I think this is just the market correcting itself before tomorrow and just getting level on stuff. Aussie dollar yen and New Zealand dollar yen and US dollar yen we know about. So obviously that's pulled back off the highs. Look, they didn't manage to get through. So double top going in there. So we'll see what the reaction's like here, but you can see they've just pushed back very hard on that. Missed it. Yeah, so we've had a very strong double top reaction there. So we'll see if they get through this level. They're trying very hard at the moment. Can't believe there's so much buying pressure up here. I really can't. I don't know who's buying this. Some bank or institution with large balls, or central government, or as my conspiracy theory was the other day, or whenever it was I put it in the Telegram or Discord group, it's the Japanese. They're basically just selling the yen, all of it, and they're just selling it, and they're just going to sell it, and they're going to keep selling it, and they're going to turn around and go, up you lot, we've got all your money, because they'll have so much assets overseas. They won't need their own currency. Who knows? But they're certainly not doing any intervention, are they? So just having a second try. You just look at the 5-minute chart. So that's higher day. We might get a big kick down off of this. Fed swaps longer, fully pricing a rate cut before December. We're getting further and further back. This is why this US dollar is rallying. We are further back now. So now we're a rate cut before December. That's November. Yeah, we started off, we're doing a rate cut in May. Then we push back to June. Then we push back to August, September. Now we're before December, i.e. at some point this year, we might squeeze one in. Yeah. That GDP number dropped dramatically. That's not good. So it's not looking good for inflation. I reckon inflation might bounce again. We'll see. We're getting kicked back off of the highs at the moment, which is good. Got addicted to chai lattes. My wife's fault. So 155.730 higher day, which seems to be holding at the moment. So we've done sort of around about half an ADR so far today. So still room to go. RSIs have all reset, so there's no hourlies now. Everything that was extended on the hourly is in the middle of a pullback. Adam, is trading your main only source of income? It is my main source of income, yeah. Fed swaps longer, fully price in rate cut before December. I just said that. Yeah. We had some yeah, sorry, I just saw something about Russia there. I'll just pay attention to anything that's got the word Russia in it. We had Muller speaking earlier today as well. Back here. I'm not comfortable starting with back-to-back rate cuts. So it's not Lagarde saying that, but it does indicate that the first rate drop that we're going to get in June, obviously, will be a 0.25 when it loads. So we're sitting at 4.5. So June, we will go to 4.25. So what they're basically saying is it's kind of like 1, 2, skip a few, see what happens sort of thing. But at the moment, they're down at 2.4 with a 0.2 drop on the quarter. So that 4.25 we go down to in June. You've then got July, where they're going to skip, and then we're going to move to August. So August is obviously bang in the middle of summer trading, light liquidity. So it is a time where we tend to see things stagnate and stall. So I get the feeling from literally from where we are now, because we are at end of April now, going into May. So we're going to drop that rate in June. So we've literally got somewhere between 4 to 6 weeks before that happens. The market tends to price in movement somewhere between 3 to 6 weeks ahead of it happening typically. So I think from now, assuming we're going to get the normal reaction that we do when interest rates drop, which is negative currency effect, we should be starting pretty much from now to look for short-only positions on the euro. So if you look at all the euro pairs at the minute and where we are, obviously we've been very stagnant, very sideways on pretty much everything we know. So RSI hits to the upside, shorts. ADR hits to the upside, shorts. If you take any hits to the downside and they come out and say anything more like they just said there, where we're not comfortable reducing the rates month on month, if Lagarde comes out and says, I don't know what he's talking about, I'm planning on dropping in July as well, it's just going to accelerate the drop on the euro. If they come out with a 0.5 instead of a 0.25, it's just going to accelerate the drop on the euro. So everything euro really, as you can see, the worst kind of move we've had against us was there. So even if you'd have scaled in on that one there, yeah, you're out in 2 or 3 positions. If you're going to get into shorts, you shouldn't need more than 2 or 3 positions, really, because there's going to be so much downward pressure. So even if you get something like the Canadian dollar really get bad news and the Canadian dollar drop, the euro is going to pump against the CAD, but not for long, because the euro is going to have some negative news coming through that's going to drive it back down again. So as soon as the CAD gets anything neutral or positive, this thing's just going to drop faster. So everything euro really kind of want to set it to short only mode, and see where we go over the next 4 to 6 weeks. But as you can see, there's been no, if you look at the euro, we've had no bullish price action. We are definitely in bearish market structure. Yeah, so especially against the US dollar, but Euro New Zealand, we haven't rallied since July last year. Yeah, against the yen, we've obviously rallied because the yen's just been collapsing. But dropping against the pound, Swissy, we've had a rally off the Swiss interest rate change. So the Swiss decided to change their interest rates. That's why we got this. Euro Swiss is probably one to avoid because obviously the euro and the Swiss moved together. But Euro CAD totally sideways and Euro odd sideways. So, even if it does stay in a range and you get in short, you're not going to get very far, before there's some kind of negative reaction. So this is all assumptions based on history, obviously. So typically what happens with interest rates is when you drop your interest rates, you become less attractive against the other currencies. Therefore, money tends to come out, investment comes out, and your currency devalues. That's what's happened in economics for the last 100 years. However, what we're seeing now is nonsense. Markets moving in any direction they fancy, regardless of what's going on, because nobody knows which direction anything should go in. So we're assuming that the 18-month interest rate rally that we saw out the back of COVID yeah, which started in 2022, is going to have the opposite effect on the decrease on the way down. It won't be as fast as that. It could be, but as we've just had confirmation of today from the ECB, this rally here was 0.25% every month without fail, with the odd 0.5% dropped in there by every single currency. On the way down, we're probably going to do a quarter, maybe have a look at CPI. Is it dropped? Is it bouncing? Or what's it doing? If it's dropped again, brilliant. We'll definitely go another quarter. We might go a half now. So it's going to come down, I think, a little bit more jerky rather than parabolic like we had over the 18-month interest rate rally. So 18-month interest rate rally, 12-month interest rate freeze, 18 to 24-month interest rate drop. Yeah, so euro going first, therefore euro is going to be the bearish currency to trade first. So I'm going to set all my EAs to short only mode. I'm probably going to set it back to, I'm thinking of 70-30. I'm going to leave it at 125 ADR because new spikes will get you into those trades. But 70-30 maybe, i.e. 70 RSI extensions. So one there, one there, one there. Drop, drop, drop. That is assuming we can get back up there, because I think when we start to drop, if you look at something like the euro US dollar during the previous drop, yeah, wherever it is, we are in it. I can't zoom out any further, but you don't find you get too many extensions above the 75 level, so this lower line, and the 80 definitely, but it's not often you get to the 75 level. The 80 level is few and far between. There's a news event, so I mean, when you get a news event, the ADR entry mechanism will get you in anyway if you're using that. But RSI extensions above 80, position trader EA or the market reverse alerts EA will get you in, but you can see how many more 70s we had. Yeah, your 70s will get hit a lot more. So you'd have got in on a short there, you'd have got in on a short there, second scale in, out. You got in on a short there, got in on a short there. So you'd have got in on that, out. So you're just going to get more opportunities. That one there. So that's probably what I'm going to do. I'm going to wait and see what happens with the Bank of Japan rate tomorrow, and I want to see what the reaction is depending on which way they go with that. But yeah, euro kind of want to start looking for short entries, but just a little bit wary. In ranges, you're going to find these 80s, 80-20s a lot more often when the market's going sideways, like it has been for the last 3-4 months, even 6 months. But when you're in a trend, those pullbacks are a lot shorter, a lot less relative strength in the pullback because it's just a profit take move. So but we will see. Fed swaps fully. I've just read that one. UJ looks so ripe for an intervention right this second. I've obviously missed it. It's been looking like that, AZ, for the last 6 weeks. It's been looking ripe for an intervention. They even said about it this morning, didn't they? Again. Just fed up listening to it. Hayashi deems rapid FX moves undesirable. Closely watching currency movements. Ready to take full response. Expects the Bank of Japan to work closely with the government. Bank of Japan to conduct appropriate monetary policy to hit price targets sustainable. Bull, isn't it? You've been saying this. I've been reading this out virtually every day, if not twice a week at least, for the last 6 weeks. They're not doing it. They're not doing it. But I'm just tomorrow. I'm very excited about tomorrow because oh hello, big orders coming in. New Zealand dollar yen ADR just got a big yen order to come in. But we've had this before, yeah. We've had these big orders. They don't go anywhere. They're preceded by a very gradual rally, but not tomorrow, not for tomorrow morning. But yeah, it's just, you know, it's not going to happen. Wouldn't it be lovely if, while I was saying it's not going to happen, they pressed the button? Are you watching? Japan? Yeah. Last time they intervened, it was on stream. So why not do it today? Come on, while I'm live, just pop the button, pop it down. And let's see if you can hit my target. I've set the Bank of Japan a target of 800 ADR. Oh, I'm way off. So that's 10 ADR. Yeah, 800 is going to be 76 minus 140, 760 minus 140 is 620. That's my target for the Bank of Japan. That's what they did last time. Yeah, that's what I want them to do this time. So that is where you will be within 2 4-hour candles. Wouldn't that be nice? In the first 3 months, I succeeded to do 12% each, but the last 2 I dropped 7% and 5%. Hope that won't keep going down. It's been a terrible month, a terrible quarter. It hasn't been a terrible quarter. That's a lie. It's been a terrible month this month. Well, it hasn't been a terrible month. I'm up 2.5%. I'm just in close to 20% drawdown. So the month isn't over yet. But it's not. We've had three successive squeezes in the last 2 months on Aussie, New Zealand, US Swiss, and US yen. So it's very rare you get 3 squeezes together. I've had 2 together, but I've not had 3 together at the same time. Not that I can remember. Not this big anyway. But then again, I keep saying it. You know, we've never been in this situation, have we? We haven't had this market situation before, this interest rate freeze. So just watching this, kind of need a weight on it, don't we? But I don't think a weight's going to do it today. We'll put one there and see what happens. I'm going to give it 100 tons today. If this works, I will clip this, make a video of it, and it will become infamous. He will be known in history as the guy that drew a 100-ton weight on top of the yen 5 minutes before the intervention move. He called it. He's psychic. And I'll get a crystal ball out. And that'll be my thumbnail. Mumo, matters DD control on PTEA. Say you set the EA to close 30% on 5% drawdown. If the position keeps going against you and hits 5% again, the EA close another 30%. Yeah. So it closes every time it gets to the drawdown level, it shuts a percentage. So you're actually better off using smaller drawdown targets and higher percentage closes. Because what you find is if you set something to be, say, 3% of drawdown and close 20% of the trade, yeah, what will happen is the market will push hard against you by 3%. You will close out 20% or 30% of that position. So you'll have a close going like that. And then the market will do that and push up to here. That will be 3%. Again, so it will just close another portion of it out and then another. And what you end up doing is taking multiple 20%. So it actually is better to, I think anyway, to close out a higher percentage. So close out 50% of it when you get to 2% in drawdown, for example. Yeah, the trade is wrong. Yep. So we're not saying you never get out of a trade. you still do drawdown control. You can see I've got drawdown control on here that I've been doing regularly on this US dollar yen. Lots of it. I've just deleted my weight. That's not going to happen now, is it? You watch, as soon as I remove the weight, it'll go. But yeah, doing drawdown control, you're better off getting out of the size. Yeah, because what causes drawdown control, what causes drawdown to increase exponentially is lot size. If you're using a lot multiplier, even if it's only a 1.1 or a 1.3, if it's a small lot multiplier, your lot size is incrementally increasing. So you're better off, as you get to like 3 or 4 positions on, taking a big chunk off of this lower one and then taking a big chunk off of this one, because you're adding more size. And what it's doing is it's keeping that average close so that you can make a good amount of profit. Yeah, scaling into positions is about building size so that when that move happens, you can make a lot of money out of it. Yeah. So you want to bank as much as you can when the move goes in your direction, which is why everybody feels like they're in drawdown forever, because you're building drawdown by building lot size constantly. And as soon as that happens, all of your drawdown vanishes. Yeah. So look at the US dollar yen. Let's say tomorrow we get a 200% ADR move. I'm out. Yeah. Look at US dollar Swiss. I've been in this for almost as long. I need 175 ADR. I'm out. Aussie New Zealand. I need 175 ADR. I'm out. All I need is 2 down days. I just haven't had 2 down days in 2 months because the market's just been doing that and that and that and that. Yeah. There has been no market structure, which is what a squeeze is. The squeeze is basically either a continuous push or a push and a pause, or a flag and a push and a pause, or a flag and a push. And then you get a profit take on that leg. That's where we make the money. But by the time you're here, you're in a lot of drawdown because you've got so much size on. But that move, if you get a 200% ADR move in your direction, you're not only getting out of the trade, you're getting out of the trade with 3, 4. You've seen me banking 9% in a day because I've had 2 nice size positions I've been holding for 3 or 4 weeks. Suddenly a news event kicks in. US dollar, that negative news that we had today. For some reason, the US dollar decided to rally off the back of the GDP number dropping by 1%. Go figure. But it does. But if it suddenly decides to drop the opposite direction by 125 ADR, my drawdown vanishes. Then tomorrow, if they put in a yen move, they will pull money out of the US dollar to put into the Japanese yen. This will drop by an ADR tomorrow. Before you know it, you got 4 or 5% on your books. But you've got to get out on the way. You can't just let it go forever. And even if you get out on the way, you are still going to get into some drawdown. But this is what it's all about. And this is the bit that people miss. It's you're taking a position, you're taking a trade. If you'd been trading on the US dollar Swiss for as long as I have here, which is going back to February. Yeah, beginning of February. Okay, I've been in this. I've taken some profit along the way and I've done some drawdown along the way. But I'm sitting in around about 7% of drawdown on the US dollar Swiss at the moment. And if I'd have been trading for February, March, April, 2.5 months on the US dollar Swiss and got it wrong, do you think I may have lost 7% in that time? Possibly. So all I'm doing is not taking those losses and getting those cuts along the way. I'm just sitting in the losses at the moment. And at any point, I can just go, screw it, I'm out. But somebody that gets a trade wrong this much will have made a good 7, probably more % loss. Let's say you use 1% or 2% risk, as a lot of people do on each trade. If you get 4 trades wrong at 2% risk, you lose 8% of your account. Yeah, if you've been trying to catch the top of this, you've probably got it wrong 4 times. I'm still sitting in the same amount as loss as you are. I just haven't realized it yet. There's a difference between open drawdown and realized loss. Realized loss To get that 8% back, I've got to get into a trade and I've got to hold it for a 10% gain. My way of doing it, position trading, I just need a 2 ADR move to the downside and I'm out and I haven't lost anything. You lost 8%, I've lost nothing. That's the difference. But you've got to scale out along the way. Otherwise, you'd be sitting in 15 or 20% of drawdown, which you can't do. Yeah. So it's about holding the position. This is why it's called position trading. My position is short. Am I right? No, I'm really bloody wrong. But my position is short. I can't change my position to long because this thing's gone up because I'm short. Where's my price? Here. What do I need? A couple of bad news events on the US dollar and I'm done. But what am I getting? A good news event. Nothing for 3 weeks. A good news event. Nothing for 2 weeks. A good news event. Nothing for 2 weeks. That's what I've been given. But I haven't realized the loss. I can realize the loss anytime I like. And be exactly the same as the guys that have been using stop losses and going, well, hey, I'm going to short it here. Sitting here, stopped out. Damn it. I'm going to go short again. Sitting here, stopped out. Damn it. I'm going to short it here. Stopped out. Damn it. I'm going to short it here. Stopped out this morning. 2%, 2%, 2%, 2%. Minus 8%. What am I? Nothing. Just in it. Sure. What's the odds of my trade working? 50%. I'm still in it with a shot. Not right, but I'm in it with a shot. Tomorrow. What could happen tomorrow? Bang. If it goes up and then comes down, damn, I'm going to take around about 5% loss. But I will be sitting in 4 positions at 800% ADR in profit. They are going to pay for that. Easy. If it happens. I don't know if it will happen. What's the other thing that could happen tomorrow? The Japanese increase their interest rates and the market goes, blimey, weren't expecting 0.35% increase. They said that we were going to do 0.1. Bang, bang, bang. Next day, bang, bang, bang. That's probably my break-even point, to be fair. But what have I lost? Nothing. What's everybody that got in from where I got in here? Actually, it wasn't there. You see, I've made load on that one. But then I got back in here, expecting a continuation short. Didn't get it. So what's everybody that got in there and stopped out on that one done trying to catch the top of this? Getting stopped out. Trying again. Getting stopped out. Trying again. Stopped out. Trying again. Stopped out. Because that's what everybody does. Try to pick the tops and the bottoms. You can't. You can't do it. What you can do is build a position waiting for the market to go in the direction it's going to go in. And it will go in that direction. Because if it continues to go that way, you might as well bomb Japan because they can't trade. They cannot trade at these levels. It's becoming increasingly difficult to export any goods out of their country because the US dollar is getting too expensive. That's why interventions happen. And if interventions don't happen, at some point, everybody that's been long in this US dollar yen is going to go, Christ, guys, if we don't get out soon and they do that, we're going to lose all our money. And they will get out. And that's exactly what happened back here. They got out. Yeah, they've been buying the crap out of it for months. They got out. And look how fast the profit take move is. Measure it. Yeah, 1, 2, 3, 4 days. 400 pips. 76 ADR. 70, 140, 280. That's over 6 ADR drop in 4 days. Imagine a 6 ADR drop in 4 days. We're going to be coming back down and testing this level. I'm out. That's all we're waiting for. We're waiting for fundamentals and news to shift in our direction because they don't go in the same direction forever. But you've got to pull the plug at some point. And that's basically where we are with this at the moment, where I am with this. I mean, everybody's going to be in different positions, aren't they? So, need some John Wick intervention. Didn't we have John Wick? Where's my John Wick going into Japan? I don't think I've got him. I don't think I saved that one. Anyway. He knows what he's talking about. Yeah. The guy survived many films, survived many films. He fell from the top of the Continental Hotel to the bottom outside and survived. He knows what he's talking about. It goes up and it goes down. That's literally all it does. What we're waiting for is the down. And it's certainly not wanting to go above today, is it, at the moment? So we'll see. These are liquidity grabs for going up more on JP, on UJ. If you say so, I'm glad you know, because I don't. Who told you that? Let me know. My 100 tons screams for a like. Just the one. I don't know how many thumbs we've got, but there's 70 people in here. Do a few more. Yeah. If I manually close out one of 3 trades on a pair, will the position EA recalculate the profit targets for the remaining 2 orders? Yeah. Yeah. So basically, all the position trader EA does is it's basically got your target wherever your target is. There. Your exit target, obviously mine sit on the VPS. This is the one that's on button trading only. So you set your profit targets there and it monitors the profit of this position. So if you have 3 trades on and you take one off and you've only got 2, those 2 have got to hit that percentage target. Yeah. This is why we work in percentages of our account. We risk a percentage of our account over a distance and then we wait for a percentage return. Literally it. So if you've got 2 on instead of 3, obviously your lot size is going to be smaller, your drawdown is going to be smaller, but the amount of distance you've got to move to make your target will be further. So, which is why, you know, it's kind of a semi-automated thing. Deal with it as you want. I'd imagine the first spike up on Euro US dollar was because of stocks being sold and converted to euro right after the news. Well, no, it's the US dollar moved. The euro didn't move. This is the US dollar rallying. Yeah, it's not the euro. Euro's actually rallying. Look, euro's pushing. Well, it's not. It's kind of pushing a bit. Nice 3-bar reversal going in on euro pound. Let's look back at the charts on UJ. There are many long wicks down with no body. Yeah, I know there are at the moment, Champagne Pappy. I totally agree with you at the moment. And I can also show you the opposite, where there's lots of long wicks down and then it pushes up and drops dramatically. Everybody's got an opinion. This is why the market works. Yeah. These long wicks down, a lot of people say, oh, that is selling pressure and you should get into it. Yeah. If you read any candlestick book that teaches you about trading candlesticks, they will tell you if there is a long wick to the downside in the middle of a range, you ignore it. Because all it is profit taking. Yeah. That profit taking releases pressure and it does not mean that they're going to go long. If the market moves down and you get a long wick, that is exhaustion. That is a bullish move. Same in reverse. That is a bearish move. That is nothing if it's coming sideways. Yeah. Look at this market to the downside at the moment. You got long wicks, you got long wick to the downside, didn't do anything. Got long wick to the upside and long wick to the downside. Doesn't mean anything. It happened to go up. The odds were 50-50. Yeah. You show me, I can show you 1,000 times where there's a long wick to the downside and then a day later it collapsed. I can also show you a load where there's a long wick to the downside and it rallied because the odds are always the same. Price action, and this is why nobody ever makes money at price action trading on low time frames. Because, you know, look, there's a prime example of you being wrong. For 1, 2, 3, 4, 5 days, you were wrong. Totally wrong. That wick down 5 days later, that's got nothing to do with that day at all. Just because there's long wicks down at the moment doesn't mean it's going to rally. It means it's sellers coming in potentially, or it's buyers taking profit because of tomorrow. Could be anything. Yeah. There's always got to be a contrarian view, because if you don't say short or long, I don't say short or long, we don't have a transaction. That's all we're watching. We're watching transactions between large market participants. Because one candle does one thing doesn't mean the next day is going to do anything the same as the previous day. Look at that massive long wick to the downside. Oh, we dropped for 5 days after that long wick to the downside. Big long wick to the upside. Dropped. Big long wick to the downside at the bottom of a move. Big long wicks to the downside in a sideways movement don't mean anything. When you've been around as long as I have, you've seen everything. And I can totally agree. A big long wick to the downside has a 50-50 chance of doing that or that. That's what I've learned. But your risk parameters are easy. If you see a candlestick like that, you get in long, you stick a stop under there, and if it doesn't work out, you get out. If it does work out, brilliant. This is why everybody uses candlestick patterns, because they are easy to put a stop in place underneath a candlestick. Yeah, when you see a candlestick and it is a signal for you to do X, you have Y as your backup. Yeah, your plan is, because that candlestick's wick was long and there's a head on it, there's more buyers in there than there is sellers. So if the guys that made that candlestick wick are right, it shouldn't get below that level. Next day, it does that. And then it goes wrong, but right. Doesn't mean anything. Every day you get a candlestick, the next day is a different candlestick. The odds are you're going to get a bearish one or a bullish one. There's only 3 things that can happen. I've covered this before. When you have a candlestick painted, the next candlestick can be one of 3 scenarios. It can be bullish, closes above there, bearish, closes below there, or it can be an indecision candlestick where it doesn't get above that level or below that level, or it gets above and below both of those levels. Those are indecision. Those are bullish and bearish. 3 things. Prove me wrong. Go and find another scenario out there. There isn't one. You can only do one of 3 things. It either doesn't go anywhere or it goes up or down. But every candlestick that's painted, the next one is just a representation of price over time. And that hour, day, week, month, 5 minutes is not the previous one. Bullish candlestick followed by bullish candlestick does not mean there's a bullish candlestick coming. Indecision followed by indecision means it could go up or down. 50-50 every single time. All there is. But right now, yeah, I agree. But I also have observed many times where we get that and we don't do anything. And today, that I think is probably the market just going, screw it, we're not doing anything else until tomorrow morning. But we'll see. Oh, there he is. Oh, hello. What the hell? That's just after John held up the Bank of Japan. There it is. Found it. That's what we need. John sent over to the Bank of Japan to the guy with the funny glasses. What's he doing? All right, is it? Look at the concentration on his face. I wish I hadn't drawn that. And look, there's the man that moves the barriers for the ECB. There's Lagarde's man. Anyway, it's all a bit of fun, but can they just bloody do it? Someday they will. Do you ever get worried this UJ, instead of going down 6 ADR in an hour, it might spike 6 ADR in an hour? No. I've never experienced it. But that doesn't mean it can't happen, obviously. Yeah, I mean, it could easily go up this is why I've got stops in place, and I'm fully expecting, unless this market gets down to ADR today, I'm fully expecting those to be gone in the morning, either through swap or through a bullish move, spread rather. But a move. We know 225% of ADR gets achieved 2% of the year. Yeah, so 2%. So when you got, was it roughly 20 trading days? So you got 240 odd trading days in a year. So 2% of those, yeah, which is about 4 or 5 days a year, you'll exceed 225 ADR. The rest of the time, you won't. What have I just joined? Yes, Gav, you're late. We're just sending John Wick to Japan to shoot the Bank of Japan governors and press the button to do the intervention. We'll see. So yeah, but yeah, I mean, if it spikes up, I'm out. That's why I've got those positions in place. And if my broker's watching the stream, you're welcome. Afternoon, Themba. I used to work on the trading floor of a Japanese bank in London. They go to great lengths to achieve consensus with all parties affected by a decision. The bigger the decision, the longer it takes. That would confirm, Vaughan, exactly what we're seeing here, wouldn't it? This thing, they've been talking about it since 145, which is not even on the chart anymore, is it? Bloody hell. But they started talking about it again properly at 150, didn't they? That's where we had the OI. That's where the OI came in. But 145 was the original intervention talk. Then 150 was the line in the sand. And that's when the market got scared. And now we're talking about it again. Yeah. And they do hold the market. You know, when they come out and say, this talk about intervention does put the brakes on. It does have the desired effect, doesn't it? The desired effect is that, but it certainly, as we can see, it puts the brakes on the market. But, you know, in the past, they've done it, and this time they're not. So something is different. Something has changed that has allowed this move to happen, which, you know, hasn't happened in the past. Trading is all about learning and adding to your experience and learning what the market is capable of. And it will always, always push you further than you think it will ever go. There is always a new norm. Yeah. Every time I look at the RSI and I say to everybody, you know, when you get above the 80 level on RSI, it's highly unlikely you will not get a profit take move happening. It's unbelievably rare. Yeah. The market will always at some point in time go, screw you, I'm doing exactly the opposite and I ain't stopping. And that's why you need to take very, 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 very small positions. Yeah, this is the biggest squeeze I've ever been in on triple currency at the same time. Worst case scenario, I'm in 20% of drawdown. I'm 26% up on the month, and I'm well over 20% up on the previous intervention moves. So in the grand scheme of things over time, yeah, it's going to hurt. But it doesn't take you out, does it? That's the thing. It's about staying in the game. You can't stay in the game if you haven't got capital. One of my wise mentors taught me, I can't remember exactly what his saying is, which is really bad, because I just was about to say it, and I can't remember what it was. I can't remember. It was part of a 4-rule thing that he had, basically. But rule number 1 was capital preservation. And reason rule number 1 is there is because if you haven't got capital, you can't trade. Rule number 2, if it affects rule number 1, scrap it. Basically, that was it. Capital preservation. It's all about preserving and keeping the skin in the game. Because if you haven't got any skin in the game, you can't make money. Same as any business. So you've got to draw the line. And, you know, businesses lose money. Traders lose money. It happens. So it's just part of the job, part of the game. Just minimizing the losses when they occur. You've seen me have many 20% plus month. This is looking like it's going to be somewhere in the region of, if the intervention doesn't happen or if the Japanese yen pushes tomorrow, somewhere in the region of a 10 to 12% loss. The grand scheme of things, it's just a blip. Think about your P&L. Think about a back test. That's what happens. It's one of those. It's one of those months. I get 2 to 3 of them a year. Isbeth, afternoon. Have a good day. That was quick. You just said hi, and then you said have a good day, which means you're probably going. That's the fastest visit I've ever seen. Right, so that's all I've got for you today. There's nothing happening at the moment, as you can see, US dollar yen wise. We've put the high of the day in. We've hit the high of the day. Market is open in New York. So we'll see what they decide to do. We're pulling back off of yesterday's high on US dollar CAD. I would imagine US dollar Swiss is pulling back off the highs as well. Yeah. So we're pulling back off yesterday's high. Today is all about waiting for tomorrow. So that news that we've had today hasn't really done a lot. So we've just run into yesterday's limit orders, and we're jumping back down again now. So I would suspect this is what we will do until around about 3 o'clock tomorrow morning. 3 o'clock tomorrow morning, all hell breaks loose. Potentially, yeah. I mean, I don't know. We haven't. This is new, isn't it? Bank of Japan using interest rates is new. We haven't had it for a long time. So what the market's reaction is going to be to this will depend on its exposure everywhere. So not sure what we're going to see. Last time they increased their interest rates, everybody was expecting the yen to power up. It went the opposite direction, didn't it? So, you know, we don't know what the reaction is going to be tomorrow. It's highly likely there is going to be a reaction. That's what we got last time. We'll see what we get this time. So we'll have to wait and see. But I'll be back on tomorrow morning at 8 o'clock. My wife's got to go for a minor surgical procedure tomorrow. So I've got to go with her in the morning sometime, about 9:30ish, I think. So I'll be on from 8. And basically we'll just stay on and analyze what the fallout is across all the currencies tomorrow morning. And see where everything's gone. So it will have gone probably one way or the other quite harshly by the time I wake up tomorrow morning. So be on for 8 o'clock tomorrow. We'll do an analysis of the interest rate decision. We'll look at everything else. Yeah, as I said, the only change I'm making at the moment is I'm going to flip short only euros. So I don't want to be getting long on anything euro at the moment, because obviously we've got the first interest rate change coming now within a couple of months. So want to start getting ready by getting into some short positions. So worst case scenario, you should really only ever get into sort of 4 to 6 week squeeze on the euro before it starts to tumble. So short only is the way to go. So that's about it for today. Watch this. Obviously, keep your eyes peeled. There is, you know, I find it incredibly hard to believe that the Japanese would do anything today. You wouldn't put it past them. So just keep your eyes peeled on it, really. That's all we can do. QR the misses. Quick recovery. It's not even bad enough to need a recovery. It's very minor. Nothing exciting. JPY better shake the markets tomorrow. Yeah. So, yeah, I'll be back tomorrow morning. Anything you need, I'll be in Telegram or Discord. Anything you want to discuss, obviously, let me know. But other than that, I will be back in the morning and we will see where we go. All right. So have a good day. Anything else, I will see you in Telegram or Discord.